day to you. First of all, I'd like to extend a warm welcome to you all, wherever you're watching in the world, especially to new subscribers to clivemorn.com and also to the YouTube channel. Now, this video is going to be a departure from the ones that I've done already, because for many years I've wanted to write a book about technical analysis, but I never got around to it because I was, for one reason or another, and I was so busy working on my website. And I finally realized that probably a better way of going about it would be to make a series of YouTube videos explaining different aspects of technical analysis. Because let's face it, these days, many people, many of the younger generation, don't exactly read very much. They tend to watch videos or do things online more. So I thought it'd probably be a better idea to do videos explaining technical analysis, which is, of course, also easier for me, because I make the charts anyway for the website. So we're going to get started today, and the subject we're going to look at today is base patterns and continuation patterns. And we're going to start with a particular pattern, which is the cup and handle. The reason being that I have a bunch of suitable charts to hand. And later on, we'll be looking at other formations like the head and shoulders, tops and bottoms, saucers, and these kind of things. So, and also candlestick patterns. So we're going to start today with the cup and handle pattern. And basically, there are two types. There's the cup and handle base, right, which follows a bear market, which leads to a new bull market. And there's the cup and handle continuation pattern, which is where you have maybe a bull market, and then it leads, and then what happens is the cup and handle pattern represents a major pause in an ongoing bull market that is then followed by a resumption of the bull market after a very, very long period of, sometimes a very long period of consolidation. So we're going to look at going to look at cup and handle patterns for three massively different time frames. One is very long term, another is medium term, we can say, and the other is very short term, because these patterns exist basically on all scales. You get huge ones, you get medium sized ones, and you get small ones. And I can illustrate this very well today. And we will start with this humongous cup and handle pattern that has formed in silver, which has been forming for 45 years. It took it 45 years to break out of this gigantic cup and handle pattern. Now, we've looked at this chart several times before because it's an absolute classic, And in fact, in many decades of doing this work, this is the most spectacular technical pattern I think I've ever seen. It trumps all of them. And we've looked at it several times before. We'll start with this because I picked up on this last fall, or last autumn, as you'd say in England. And, I posted this chart on my site, and it got posted on some public websites as well back last September, before silver broke out, which was in November, December. Now, the chart we're looking at now, the first chart is, I've labeled it the chart of the ages because for me, it's the most spectacular chart I've seen in my working life. And its implications are humongous. They're enormous, and silver's going much, much higher. So this chart was posted on the site last September and sent out to public websites as well. Now we're going to look at what happened. This first chart is the chart from when it was first posted back at late September. And the second chart, you can see that the cup and handle's been pushed down. And the reason it's been pushed down is, of course, because silver rose to about 118 at its peak, $118. Now, a key point with this is you do not have a formation that takes 45 years to develop, and then it's followed by like a 3-month or 6-month bull market. No, this is the start of something really, really big, and therefore I regard the current post-breakout pullback that we've been seeing in recent weeks as a massive buying opportunity. And it doesn't matter if it drops a bit more. It doesn't matter if it breaks down from the parabola that we'll look at later, because this major breakout marks the start of an enormous bull market in silver. And the furthest back this silver should react is the breakout point, which for me is at $55. And we've already seen 65 a couple of weeks ago, and that could well be the bottom. I've surmised it is the bottom, although because of the parabola of the last few months was so steep, there is the possibility that it will break the parabola and drop a little lower. But if it does break down below the parabola, I think all it will do is move sideways and consolidate for a while, and then gain upside momentum again. So that's this is a very, very, this is an example of an enormous cup and handle pattern. And now we're going to move on to look at a medium term, a fine example of a medium term cup and handle. Before looking at the medium term cup and handle I just mentioned, there is one further point I want to make looking at the silver charts. We're going to zoom in on the gigantic cup and handle pattern in silver that we've just looked at via a chart from the year 2000, on which we can see that the handle of giant cup and handle pattern is itself a cup and handle base, following the bear market from the 2011 highs. So you have a kind of Russian dolls effect here, where often you can have a cup and handle that is sitting within a larger cup and handle, and that's what we've seen here with the handle of the gigantic cup and handle going back to 1980, actually itself comprised of a lesser order cup and handle base. But having said that, this thing went on. This lesser order cup and handle pattern dragged on for 12 years. During that time, some of us got old, So that's that. Now we're going to go on, as mentioned earlier, to look at the medium, a more medium-term cup and handle pattern. Generation mining presents a superb example of a fine cup and handle pattern. Now I spotted this back last September, and we bought it. This is the chart from the article that was posted on the site back last September, and you can see for yourself a completed cup and handle base, or it may have been a continuation pattern. I haven't back referenced the longer term chart, but it's an excellent example of a cup and handle. We bought it back last September. The prediction was made to break out of this and take off higher. This is what happened. You see for yourself, it's a very good performer, generation mining. I think it's a platinum or palladium stock with silver thrown in. And you can see that once it broke out of this cup and handle, which it did right almost immediately after we bought it, it took off dramatically higher. But then, rather like what we're seeing in silver now, it had a classic post-breakout reaction back to the support at the upper boundary of the pattern. You can see that here. And now, then we saw a second impulse wave or up wave, a big one again, and then a second reaction. And we can now see that a definite uptrend becoming tradable uptrend becoming established. And it's just starting to take off higher again, moving towards that resistance at the, I think it's December highs. And if you look at the MACD at the bottom of the chart, that's turned up, and it rather suggests to me that generation mining will probably run to the top of this channel again over the medium term. As you can see for yourself, it's a superb example of a medium term or intermediate. When I say intermediate, I'm talking about something lasting, say, from 6 months to 18 months or something like that. It's an excellent example of an intermediate cup and handle pattern. Now we will move on again to look at a short-term example. Again in September, I spotted another example of a cup and handle, this time a cup and handle base that followed a bearish period in a silver stock called Magma Silver. And what was interesting about this at the time I spotted that as it went into the base, the volume built up to climactic levels, which I took to be capitulation. And in the weeks that followed, I observed that upside volume built up dramatically, and the accumulation line, not shown on this chart, was rising steeply as well. And I took this to mean that this was a valid base pattern. And what was happening was that smart money was buying at the low level, taking advantage of the low prices resulting from the earlier panic selling. And you can see the persistent heavy volume coming in there in August and September, and heavy upside volume. And that led me to recommend a stock on the site at the point shown, which was 12 cents. And this is as I say, this is a much shorter term cup and handle pattern. It only lasted a month or two, 6 weeks maybe. And but look what happened after it took off high. It had a very powerful breakout move, and that breakout in the middle of September was on very heavy volume, which has long-term bullish implications. Now, what happened with this one is that we took profits when that triangle formed, which is, you can see, because that triangle formed beneath resistance, and I was a bit nervous of it reacting back. So we took profits in the event too early, because it actually, although it did dip a bit, it then turned around and went zooming up again. But as we look at its somewhat longer term 7-month chart, which crushes the little cup and handle, you can see it pushed over to the left there and made rendered diminutive by this chart. You can see that we sold at about 20 something cents, whatever it was, and for an 83% gain, I think it was, in 3 weeks. But then it dipped a bit and then turned around and went zooming up to about 40 odd. But that was only a short-lived spike or spike type peak. And it came down again. It was obviously consolidating. But then again, rather like generation mining, it seems to be becoming established in an uptrend now. And since it's now at the lower boundary of this uptrend, at a time, and on support, at a time when it looks to me like silver's getting ready to take off higher again, and the other metals, this is probably a good buy spot here, because I think it could well go up to the top of this channel. So there you have it. 3 really good examples of cup and handle continuation patterns and bases over wildly different time frames. Now, there's one final point I want to make with these cup and handle patterns, which relates to the psychology. And in markets, psychology is very important, which is that the cup and handle pattern, the reason the cup and handle pattern forms, I can explain it to you, right? Because what happens is when the right side of the cup forms, very often it forms on very heavy volume. And the reason for that is that the market suddenly gets its, after a stock and the company has been in trouble, often for a long time, and there's perceived to be some risk of it going bust or being in serious trouble. What happens is there are developments so that it becomes apparent to the market and to smart money that the company is turning the corner, and better times lie ahead. So this is why they pile in, and you get heavy volume on the rise to form the right side of the cup. But then invariably what happens is that the buying gets overdone. There's too much enthusiasm, and it takes quite a while for the fundamentals of the company to catch up with the with the improved outlook, if you like. The market perceives a much better outlook, and the market can, buyers of the stock can act more or less instantly. But it takes a while for the fundamentals of the company to improve to match the increased optimism. And that is the reason for the handle of the cup and handle pattern. So there you have it. And that's all I'm going to say on this subject. And probably the next video will be on the head and shoulders, tops and bottoms, but I've got to pull together some charts for that. But actually, I just thought there is one other I want to show you before I go, which is there are variations on this cup and handle pattern that I've spotted over the course of many years. I've spotted different variations on the cup and handle pattern, and one of them is this one here for Giant Mining Corp, which I've defined as a pipe base. The reason being because it looks like one of these old clay pipes. Now, one of the characteristics of this pipe base is that the handle, or the handle of a pipe, you could say, it tends to drag on and on and on, and it can go on for a very long time. And it can be very frustrating if you're an early buyer, and you buy, say, sometime in the cup or on the right side of the cup, and you then get stuck with it while it forms this handle. So the trick is with many of these cup and handle patterns is if you see the price rising steeply to form the right side of the cup, and you can see that it is a cup, when you think it's topping out, the volume becomes heavy and the right side of the cup looks like it's completing, ditch it. Just sell it, take profits, go somewhere else, and come back later when the handle's formed. And the handle can take ages to form, as we see here with this pipe base for giant mining. Now, in the case of giant mining, it's just broken out on very heavy volume from the from the extended handle of the pattern. It's just broken out on very heavy volume. So I think this is starting a major bull market. And but as I say, the tactics with these cup and handle bases are to sell on the right side of the cup, await developments, wait and see what happens, and then when you suss that the handle is complete, as we did with generation mining, and as we did with silver itself, that's when you move in. Anyway, that's all I'm going to say about on this subject for now. And the next chart school, I'm going to call this chart school. And for a bit of fun, we'll call it Class of 26, because 26 is going to be an excellent year for resource stock investors. We've seen that already. It's going to be a truly excellent year for resource stock investors, especially precious metal stock investors. And I'm calling it the Class of 26 because in years to come, you'll probably want to get together with other class members, and relive the old days, and have a bit of nostalgia about it. So chart school Class of 26, the first lesson or discussion is these cup and handle patterns, because and we started with these cup and handle patterns because these are the first best example charts I could lay my hands on quickly. And we'll probably move on to the head and shoulder, top and bottom next, and then consider other formations later. Anyway, I hope you found this interesting. And, this is practical information. We're not interested in intellectualizing just for the sake of it. We're here to make money out of these things and have fun at the same time. Two aspects to this. One, it's interesting. Two, it's fun. Three, make money. So I think that's a pretty good combination, don't you? So that's all for now. And if you're interested in following the recommendations on cliveborn.com, come over and subscribe. It's you can take a 1 month or 3 month subscription. It's not very much. And anyway, have a good week, what's left of it. And the next lesson or chart school episode will probably appear in about a week or so. So have a great week and look forward to speaking to you soon. Goodbye.